How's it going, everyone? It's Sam. We have a couple institutions that are issuing warnings, including Coinbase and JP Morgan. They're issuing warnings on Bitcoin. Now, on the other hand, we have a lot of metrics that look like we should go up. So I want to go through all this and then maybe help point you in the right direction for what you should be planning on. Of course, do your own research. I cannot give financial advice. If you do want to trade cryptocurrency, there's a link underneath the video to Margex where you can get started in just a few seconds. You can long the market, you can short the market, and you can place a little bit more short-term bets on what you think is going to happen next. And there's also a link down there to Bitcoin 2025 where you can get 10% off with the code MyFinancialFriend. The tickets are cheaper now, so if you're going to go, you might as well get them now. Let's start here. That Martini guy shows negative funding rates. Now, this is a way to keep long and shorts in check. Basically, when funding rates are negative, it often shows that there are a lot more shorts in the markets than longs. And I'm not sure exactly what he was showing here, what asset, but you can see here, ETH open interest weighted funding rate is negative. Bitcoin open interest weighted funding rate is slightly positive. But typically, when Bitcoin perpetual funding rates turn negative, we see big moves moving up because shorts get liquidated, they get squeezed, and then the price moves up pretty quickly. This is actually from the bear market, but still the same thing here. And you can see the liquidation map. We would have some longs be liquidated for sure if we go down in price, but we have a lot more shorts being liquidated if we move up. I mean, just look at the difference here. Maybe 1.7 million if we go back down to 54K compared to if we move up to, an equivalent, which is $6,000 up from here, we'd see about 3.1 billion. So there definitely is a lot of pain on the upside. And if you even zoomed out further, you'd see in the 70s, like the low 70s, a lot of people would be liquidated. And sorry, it might not be right away. It might not be like, okay, we hit here and then all these people be liquidated. Sometimes they cover ahead of time, which can force us up faster, even earlier. So it is interesting because when you look at this, it leans to me thinking that we could move up and cause a lot of pain for people that are short this market. This is also the first time that we've had zero rate cuts or zero rate hikes in a long time. Of course, we did see Japan just hike rates in July, but look at this. So many rate hikes and now nothing. Like, global liquidity is going to go up significantly, in my opinion. Keep in mind, too, MicroStrategy hasn't bought the $2 billion worth of Bitcoin yet, so we'll be watching for that as well. Russia, the world's largest exporter of natural gas, and in the top three in almost every other major commodity, will now be using crypto. So this is fascinating. They passed a law allowing businesses to use crypto for international trade to address payment delays, particularly the key trading partners of China, India, and UAE. The central bank will oversee the implementation of cryptocurrency transactions, which are expected to begin at the end of 2024. Keep in mind, Russia exports $1 trillion of commodities annually. So you have all this good news, but yet there's still people issuing warnings. There's there's fear all over the place. Coinbase issues warning of the $1 billion Bitcoin liquidation not being over. This is coming from David Duong, who is I believe the head of research over there. We believe market jitters will persist. Shorts could get squeezed, leading to a short-term market rebound. Don't be fooled that this market disruption is over. So it's a warning, but it's interesting because he talks about shorts being squeezed. So yeah, it's not super clear if he's bullish or bearish here. But JP Morgan also remains cautious on Bitcoin. They say they're still wary of the crypto markets, even though Bitcoin managed to bounce back after having the worst day since SBF's FTX crash. This is just from 2-3 days ago. They say momentum traders, including CTAs, have been exiting long positions and building up short positions. They go on a little bit longer. If the price had remained at or below this level of 49K for a prolonged period, it would have pressured Bitcoin miners, potentially leading to further declines in Bitcoin prices. So yeah, I mean, the fact is they have been back and forth on Bitcoin for years. The analysts at JP Morgan, keep in mind that they have a lot of analysts, but they I'm not sure I would be paying attention to them necessarily as the first analyst to pay attention to in Bitcoin, because their CEO has been pretty anti-Bitcoin for a long time. But yes, there are a lot of shorts piling up, but oftentimes that can actually lead to a short squeeze and push the price up. Keep in mind, Bitcoin's volatility is a feature, not a bug. That's how you get outperformance. That's how you get this. If you're not watching the video, if you're just listening, 2016, a house cost 664 Bitcoin. 2020 cost 45 Bitcoin. 2024, 6 Bitcoin. It would be interesting to see 1 year later, because Bitcoin's price in 2017 went up to, 17K? So at that point, it would have been somewhere around more like 16, 17 Bitcoin instead of 664. Then 2021, it'd be very similar to 6 Bitcoin. Actually less, because the price of a home was less. So there, we went to 64K. It was 5 Bitcoin would buy you a house. Then 2025, who knows? Maybe it's 3. Maybe it's 2. Maybe it's 4, or something like that. But it is fascinating to take a look at that. And that is why a lot of people like Bitcoin, is because you can outperform if you can keep your head on your shoulders. Bitcoin dominance still staying quite high, around 57.5%. Should be an interesting next couple of weeks, especially with us going into the fall, with quantitative easing starting, with the Fed cutting rates, with CPI and PPI coming up this next week. Earnings season is largely done, so we'll be looking for more information. Of course, there are some holidays coming up, so there might be a bit of a quiet time for U.S. markets, but overall, it should be a fun time to be in the markets based on what we've seen from history. Now, why do I show you the positives and the negatives? Because you have to make your own decision. But just to show you too, whenever there's volatility, people are going to come out of the woodwork to say either if we're moving up quickly, that Bitcoin's overvalued. If we're going down, it's to say that this is going to continue. And they're the bulls too that will say, no, this is the best time to buy. And then there are the bulls that will say, no, we're going up to 300,000 or something like that when we're moving up to the upside. Now, I think just historically, this has been a pretty good time to be in the market. Of course, you have to make your own decision, but even if you don't look historically, I think there are 2 different ways to look at it. One is historically, where are we going to move? And then 2 is whether the market is set up for Bitcoin's price to appreciate. And typically, when the Fed's going to lower rates, when it seems like we're going into a time of high liquidity, that would be a good time to be buying. So both of those line up. I think that's good. And that's why, I still hold all my Bitcoin. Let me know your thoughts, though, underneath the video. If you want to play some trades, there are links underneath the video to Margex. You can try out their platform in just a few seconds. You can get everything set up. If you already have a platform there, or if you already have an account there, you can refer someone else, too, if you know someone that likes to trade. And then you can get part of their trading fees. So definitely check that out underneath the video. I appreciate it. I'll see y'all in the next one. Bye.